Ever feel like your rent payments are a black hole sucking up your hard-earned money? If rent is your biggest monthly expense, you're not alone. But what if you could flip the script and have your investments pay your rent? In today's video, I'll show you 8 stellar options that could potentially cover your rent. I'll cover key financial metrics and growth rates, helping you understand why these stocks made the cut. I'll show you a stock that has the potential to completely pay your rent for years to come in less than 10 years, with only a one-time investment of $10,000. In the end, I'll show you a portfolio of these 8 stocks that can still reach the milestone in good time while remaining safer and more consistent. Coming up next are the 8 best dividend stocks ranked from solid performers to those that get you to $2,800 in dividends the fastest. And remember, the sooner you start, the closer you get to letting your investments pay your rent. Let's kick off our list with Rexford Industrial Realty with the ticker symbol REXR. This company is a powerhouse in the industrial real estate sector, focusing on owning and operating industrial properties throughout Southern California. But why is Rexford Industrial a top pick for dividend investors? The company specializes in high-demand infill markets with limited supply and high barriers to entry. The company's portfolio consists of strategically located industrial properties, including warehouses and distribution centers, which are essential for e-commerce and logistics. This focus on prime locations has enabled Rexford to maintain high occupancy rates and stable rental income, even in fluctuating market conditions. First, let's look at the numbers. Rexford Industrial Realty boasts a current dividend yield of 3.34%, which is quite attractive for a REIT. This means that for every $100 you invest, you can expect to earn $3.34 annually in dividends. But the real charm lies in its consistent dividend growth rate, which stands at an impressive 18.24%. This high growth rate indicates that Rexford has been increasing its dividend payouts significantly year over year, making it a promising choice for those seeking growing income streams. Another compelling aspect is the company's average share price appreciation, which is around 13.59%. This not only signifies robust market performance, but also suggests a potential for capital gains in addition to dividend income. So, how long would it take to hit our rent target of $2,800 per month in dividends? If John invests $10,000 in Rexford Industrial Realty, after 1 year, given the current yield and growth rates, this investment would grow to approximately $11,693. Fast forward 10 years and John's investment will balloon to $51,117. If he stays invested for 20 years, the initial $10,000 could potentially reach a staggering $319,105. Based on future projections, it would take around 22 years for Rexford to reach approximately $475,517. At that point, the annual dividend paid would be around $33,739, translating to monthly dividends of about $2,812, covering the target rent payment. Next on my list is a tech giant with equally compelling dividend credentials, NetEase, with the ticker symbol NTES. NetEase is a major player in the interactive home entertainment industry, particularly known for its robust portfolio of online games, education, and e-commerce platforms. Founded in 1997, this Chinese tech giant has a diversified business model that spans gaming, advertising spaces, email services, and e-commerce. This diversification provides a solid revenue stream, making NetEase a resilient and profitable company. The company's strong market position and innovative product offerings have made it a favorite among investors. The company's current dividend yield stands at 2.77%, which, although modest, is backed by an impressive dividend growth rate of 22.18%. This high growth rate signifies that NetEase has been consistently increasing its dividend payouts, rewarding its shareholders with growing returns. One of the key reasons to consider NetEase as a solid dividend stock is its average share price appreciation of 18.13%. So let's put this into perspective with some numbers. If John invests $10,000 in NetEase, after 1 year, his investment would grow to approximately $12,090. In 10 years, the investment could reach $69,893 thanks to the company's strong growth metrics. After 20 years, that initial $10,000 investment could potentially reach an impressive $557,887. Now let's address the main question. How long would it take to reach our rent target of $2,800 per month in dividends? For NetEase, the timeline is around 21 years. By this time, John's investment would be valued at approximately $693,220, paying $34,188 in annual dividends, which translates to monthly dividends of about $2,849. Up next, we have American Tower Corporation, a leader in the telecom tower REIT sector, known by the ticker symbol AMT, with equally strong dividend credentials. The company owns, operates, and develops multi-tenant communications real estate, including wireless and broadcast towers. With a presence in multiple countries and a diverse portfolio of properties, American Tower plays a crucial role in the global telecommunications infrastructure, facilitating the expansion of mobile and broadband networks. American Tower's robust business model is supported by long-term lease agreements with major telecommunications companies, providing a stable and predictable income stream. This stability is reflected in the company's current dividend yield of 3.14%, which is quite appealing for a REIT focused on growth. Additionally, American Tower has an impressive dividend growth rate of 18.22%, indicating that it's been consistently increasing its dividend payouts over the years. The company's average share price appreciation is 8.42%. So, talking numbers, if John invested $10,000 in American Tower, after 1 year, his investment would grow to approximately $11,156. In 10 years, the investment would grow to $35,070. After 20 years, the initial $10,000 could potentially reach $235,893. Also in 20 years, it'll be able to pay your rent, bringing in $34,465 in annual dividends. This translates to a monthly dividend payment of about $2,872. Even though these returns are very good, most of us don't have the time to wait 20 years for the funds to mature. Next up are stocks that do it in less than 20 years, some in less than 15 years, and in the end, I'll show you a stock that can reach $2,800 monthly in less than 10 years. Next up, we have Federal Agricultural Mortgage Corporation, commonly known as Farmer Mac, with the ticker symbol AGM. Farmer Mac is a vital player in the agricultural finance sector, providing a secondary market for agricultural loans. This unique position allows it to support American agriculture by providing reliable and flexible financing solutions to farmers, ranchers, and rural utilities. Essentially, Farmer Mac ensures that there's plenty of liquidity in the agricultural lending market, which is crucial for the stability and growth of the U.S. agricultural sector. The company's unique position ensures a reliable and growing income stream, making it a valuable addition to any dividend-focused portfolio. Farmer Mac's role in the agricultural finance ecosystem is backed by its solid financial performance and attractive dividend metrics. The company offers a current dividend yield of 2.74%, which, while not the highest, is complemented by one of the highest dividend growth rates of 25.4%. In addition to its dividend performance, Farmer Mac boasts an average share price appreciation of 20.76%. Based on these figures, how long would it take to reach our rent target of $2,800 per month in dividends? Let's run the numbers. If John invests $10,000 in Farmer Mac, after 1 year, his investment would grow to approximately $12,350. In 10 years, this investment could potentially reach $86,977. And according to projections, after 19 years, the value of John's investment would be around $694,440. with an annual dividend payout of approximately $33,906 or a monthly dividend of about $2,826. The company's unique position ensures a reliable and growing income stream, making it a valuable addition to any dividend-focused portfolio. Up next, we have Regions Financial Corporation with the ticker symbol RF, a regional banking powerhouse with strong dividend credentials. Regions Financial is a prominent regional bank based in Birmingham, Alabama, with a massive network of branches across the southern United States. The bank provides a wide range of financial services, including personal and commercial banking, wealth management, and mortgage products. Its extensive reach and comprehensive service offerings make it a cornerstone in the financial landscape of its operating regions. It stands out not only for its solid business operations, but also for its impressive dividend metrics. The company currently offers a dividend yield of 4.57%, which is among the highest in the sector. This high yield means that for every $100 you invest, you can expect to earn $4.57 annually in dividends. Furthermore, Regions Financial has a strong dividend growth rate of 21.23%, indicating a commitment to consistently increasing shareholder returns. In addition to its attractive dividend yield, Regions Financial has an average share price appreciation of 7.2%. Now, our previous stock took 19 years to reach the milestone of $2,800 per month in dividends. The question is, can RF reach the target sooner? Let's look at the numbers. If John invests $10,000 in RF, after 1 year, his investment would grow to approximately $11,177. In 10 years, this investment could grow to $44,129. After 15 years, John's initial $10,000 could potentially reach $161,366, paying an annual dividend payout of approximately $34,097, or a monthly dividend of about $2,841. So this means RF needs only 15 years to mature enough to pay John's rent of $2,800. Next on the list is Nextstar Media Group with the ticker symbol NXST. Nextstar is a leading broadcast company in the United States, offering the largest portfolio of local television stations and digital media assets. With a presence in over 100 markets across the country, Nextstar delivers local news, sports, and entertainment programming to millions of households. The expansive reach and diverse content portfolio make Nextstar a dominant force in the broadcasting industry. The company currently offers a dividend yield of 3.9%, which is quite attractive for investors seeking a steady income stream. Additionally, it also has a remarkable dividend growth rate of 27.39%. In terms of share price performance, Nextstar has an average share price appreciation of 12.4%. This healthy appreciation indicates robust market confidence in the company's growth prospects, providing investors with the potential for both capital gains and dividend income. Based on these metrics, the numbers look like this. If John invests $10,000 in Nextstar, after 1 year, his investment would grow to approximately $11,630. In 10 years, this investment could potentially reach $63,348. And according to future projections, it would take only 14 years to reach the rent payment milestone. By this time, the value of John's investment would be around $192,557, and the annual dividend payout would be approximately $33,845. This translates to monthly dividends of about $2,820. Nextstar's strategic positioning in the broadcasting sector, coupled with its strong financials and consistent dividend growth, makes it an excellent choice for dividend investors. The company's extensive reach and diverse content offerings ensure a reliable and growing income stream, allowing investors to potentially reach the rent payment target in just 14 years. Soon, I'll show you a stock that reaches that target in less than 10 years. And in the end, I'll show you a portfolio of these 8 stocks that can still reach the milestone in good time while remaining safer and more consistent. Our next pick is Arbor Realty Trust with the ticker symbol ABR. This company is one of the prominent players in the mortgage REIT sector, specializing in the origination and servicing of a diverse range of multifamily and commercial real estate loans. With a focus on structured finance solutions, Arbor Realty has built a robust portfolio that includes bridge loans, mezzanine financing, and preferred equity investments. This specialization allows the company to generate a solid income, making it a reliable dividend payer. Arbor Realty Trust is particularly appealing to dividend investors due to its high current dividend yield of 12.87%. This impressive yield means that for every $100 you invest, you can expect to earn $12.87 annually in dividends, which is significantly higher than many other dividend stocks. Additionally, Arbor Realty has a dividend growth rate of 12.93%, indicating that it has been consistently increasing its dividend payouts. In terms of share price performance, Arbor Realty has an average share price appreciation of 7.15%. While this is modest, it still provides a potential for capital gains alongside the substantial dividend income. ABR's combination of a high dividend yield, steady dividend growth, and focused investment strategy makes it a compelling choice for dividend investors. The important question is, how long will it take to reach our rent target of $2,800 per month in dividends with Arbor Realty? And can it do it faster than 14 years? Let's run the numbers. If John invests $10,000 in Arbor Realty, after 1 year, this investment would grow to approximately $12,002. In 10 years, his investment could potentially reach $85,323. According to future projections, over a span of 13 years, that initial $10,000 investment could grow to $192,032, paying annual dividends of approximately $36,633. This translates to monthly dividends of about $3,053, ultimately reaching our target of paying the rent in only 13 years. Up next, and topping our list at number 1, we have DHT Holdings with the ticker symbol DHT, a key player in the oil and gas transportation sector with exceptional dividend credentials. This company primarily operates a fleet of crude oil tankers with a focus on the very large crude carriers or VLCC segment. DHT Holdings plays a critical role in global energy logistics, ensuring the smooth transportation of crude oil across the world's major trading routes. This strategic position in the oil and gas transportation sector, combined with its high dividend yield and strong dividend growth, makes it a solid investment addition to any portfolio. The company's critical role in global energy logistics ensures a reliable and growing income stream. DHT Holdings is particularly attractive to dividend investors due to its robust dividend yield and growth potential. The company currently offers a dividend yield of 9.54%, which is exceptionally high and indicates substantial income potential for investors. Additionally, DHT Holdings has a remarkable dividend growth rate of 29.36%. In terms of share price performance, DHT Holdings has an average share price appreciation of 5.95%. Let's dive into the numbers. If John invests $10,000 in DHT Holdings, after 1 year, his investment will be valued at $11,549. In 5 years, it'll be valued at $25,990. 4 years more, and in 9 years, John's initial investment could potentially reach $112,233 thanks to the high dividend yield and growth rate. By this time, it'll be paying an annual dividend payout of approximately $36,627, which translates to monthly dividends of about $3,052, making it one of the fastest dividend stocks to reach the target milestone. But does this mean you should go all in and invest only in DHT? Simply put, the answer is no, because investing in only one stock can be risky. You need to diversify and split your investment across different sectors. For this, you need to make a portfolio. If you make a portfolio of all of these stocks, your investment metrics should look something like this. You'd have a portfolio dividend yield of 5.36%, a portfolio dividend growth rate of 21.87%, and a portfolio appreciation rate of 11.7%. You can easily calculate these by adding the respective metrics of each stock, then divide by 8. So, based on the metrics of this portfolio, how long does John have to wait for his dividend income to cover his rent? If John decides to invest $10,000 in this portfolio after just 1 year, his investment could increase to around $11,706. In 5 years, it'll be valued at $23,134. Looking ahead, over 10 years, this initial sum might grow to $50,937. Fast forward to 15 years, and John's original $10,000 could potentially reach $226,364, offering an annual dividend payout of about $35,534 or approximately $2,961 per month. Which means that this portfolio requires 15 years to mature, potentially covering John's $2,800 rent, while still being on the safer and more consistent side. Want to see a step-by-step guide on how to make a portfolio that pays over $30,000 in monthly dividends? Click the video on the screen to find out.